What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you go to coinmastery.com/invest. Join our free newsletter list. Get in the know. Get updated daily domination updates, cryptocurrency. We're talking about what's happening in the market today. We're talking about macro. We're talking about a few developments as it relates to you and decisions. And then we're going to spend a bit of time talking about psychology, but just about the decisions you make as it will affect your future on a day-to-day basis or on a week-to-week basis, depending on where you are. And a bit of a fallacy that I see a lot that hopefully will clarify a bit and help people out and all that good stuff. So first of all, I hope you're having a great day. I really do. It's a beautiful day out today. Second, more importantly, we saw Bitcoin just get completely denied from this, what essentially is a resistance level from this, let's call it 11,800 level. It didn't make it all the way up there, right? It broke through this trend line, and then we saw it just kind of really collapse all the way, especially as it recrossed this log trend line. So we're not going to spend too much time on the technicals this week. I think that we'll kind of go back and forth between that as, topics really make it worthwhile. But right now, I believe that this is more of a waiting game than anything else. Until there's a clear trend, trading the chop is really that's something you want software doing for the most part. So as we watch this thing go down, we are kind of what I would consider no man's land. And here's the way I'm looking at this. As always, guys, not professional financial advisor. This is just my opinion. None of this is professional advice. So you need to make your own decisions when it comes to this. But really, as this thing drops, I would say anywhere below 10,000, it's probably going to drop pretty far. If it gets below this 9,400, which is a pretty good previous support level, if it drops below that, it's going to drop. Unless there's massive volume anywhere. So really right now, what we're looking at is what sort of extremes does this thing go around? And obviously this is a pretty wide range. We're talking about 1,000 points almost, give or take. But we're also in a huge transition phase, and it requires that kind of change in order to get big confirmations, especially when you get to the daily. So I'm really just waiting to see where this thing plays out. How it ends up, how this channel, right? Like you can see how this thing kind of starting to coil. So if it starts to come back up, we could easily see it blast off straight up. And if it does, you can see this box up here. This is the next, I would consider, major resistance zone. So if we did see a blast through here, like we saw some really bullish behavior and it just crushed this resistance level, this next level, like right about 13.7-ish, up to about 14.2, which is right at this previous resistance. This is going to be the next one. If it can get through this box, it's going to take a few times most likely. Then we're really in business. So the big takeaway, at least what I'm doing, I'm hanging tight. I'm taking this time to learn and to study and to prepare for the next big move in the market. But there's a pretty wide range, and you can trade certain things, which we'll talk about in a second here. But for the most part, it is what it is. So that's just what I'm looking at. Other traders will have different opinions, but so it goes. Let's take a look at Waltonchain. I've brought this idea up a handful of times, really since the beginning of Coin Mastery. This is something I've always liked, and I've always tried to capitalize on as often as I can. It's a little bit of a falling knife situation. If you don't know what that expression means, it's like when you're watching something free fall, you're trying to catch the bottom. That's like catching a falling knife. But with Waltonchain, as we talked about, they had that tweet, like giveaway that was like a complete debacle that happened, and the price plummeted. Look at this. It went from, let's call it 21,000 sats down to, I can't see that behind my screen, but let's call it like 17,000, I think was right around where it ended up. It came back and it started to level off a bit. You saw a few pumps here and there, and then you saw the price even out. And then today, they got some really big news. I believe it was a partnership with Alibaba, and it skyrocketed. So this skyrocket would have happened no matter what happened with the giveaway. But the big takeaway is that whenever, remember what crypto is. I mean, listen, I think blockchain and crypto and Bitcoin, I think it's all going to, in the next 5-10 years, it's going to do just insane, massive things for the world, for the government, for wealth, for all of that, for technology. I don't disagree with that. But right now, in 2017, 2018, I guess, this is a speculative marketing game. Okay, you can have whatever opinions you want, but the way that these prices work is based almost entirely on belief and stories. And that's not a bad thing. You just got to know what's going on. And the reason that matters is that anytime you see a price on a coin have a huge dump, and that dump is because of something that is like people lose faith in that coin, it almost always comes back. And we've seen this happen time and time and time again. And Waltonchain is just the next in line, and there's going to be plenty more where this came from. So keep your eyes open. Next time you see a coin dump because of bad news and everyone's just feeling emotional about it, know that it's going to pump at some point. And I can't promise you that, so, whatever. But, I mean, it's like 99% at this point since last July for this sort of thing happening, especially when you're in a bull run. But even now, it seems to be happening. So these are the kind of things that you can keep your eye on, because if you know the game you're playing, it can really work out for you. All right. Taking a look at the crypto market cap, we're over switched to the BTC. Really, again, kind of like the technical stuff. There's not a whole lot to say here. There's a few things that we're going to talk about with VeChain that I think is really interesting. It kind of relates to what we just talked about, but this Bitcoin dominance. I think that this is the story of Q1 2018. How Bitcoin is really reclaiming a lot of dominance back. And as we mentioned in the video yesterday, like Coinbase downloads are decreasing and they're going on a big marketing push. When you're looking at your portfolio, whenever you're looking at any sort of price action, whenever you're thinking about the future, so if you're looking at these coins, you flip over to the BTC terms and you're like, all right, when's alt season coming? What's Bitcoin price going to do? Blah, blah, blah. The most important thing that you need to be able to answer for yourself, where is the money coming from? Who is injecting money into the ecosystem? Is it retail people like me and you who go and buy stuff on Gemini, Coinbase, whatever exchange you use? Is it big institutional banks? Is it investors? Is it money that's been sitting on the sidelines waiting to get back in crypto that was previously in crypto and now it's just coming back? The more you can determine that, the better. With BTC dominance going up, my personal theory, and I'm working on trying to prove this out, but it's hard with the lack of data, is that a lot of this price action from Bitcoin is being driven by people selling altcoins. This isn't like a huge trend, but if the dominance is increasing, the price is kind of increasing, but the volume is not nearly what it was when it was increasing last year. Like that's fresh money volume, right? Volume is low, price is kind of trickling up, dominance is increasing. The number of new people coming in is decreasing, which tend to be altcoin buyers. And so you start to put together these theories of where does the money come from? And then you can start to forecast and wrap that against macro trends that you see. And most importantly, you try to poke holes in your theories. I think that's the key, is you always try to prove yourself wrong. You don't try to go and back up. You don't try to find things to support your thinking. You try to go find things that shut down your thinking. That's how you get better. That's how you make money. And that's just like a trend you see a lot of in crypto, is people try to find people that back up their own beliefs. When in reality, you want to find people to tell you you're wrong and have good reasons why. That's how you get smarter. That's how you make better decisions. right? Because it always comes back. Not being wrong is way better than being right. Sounds the same, but it's different. Let's switch over to a few trends that I think, a few macro trends that are developing. Obviously, this one being the United States regulatory commission, or not even commission. So the big story earlier this year, and continues to be, with the SEC and the CFTC, which are more of the governing bodies to like for the integrity of the markets. It's really what they do, and the integrity of markets is a nice way of saying protect the citizens of or participants in that market. And that's what those guys are. That's kind of like what their mission statement may say on their, above their offices. Now, on the other side, you get into company or regulatory departments like FinCEN and FINRA, however you want to pronounce it, which are much more interested in compliance, in making sure that the inner workings of these ecosystems are compliant with our law system, right? And so there's a lot of different layers of all of this. But yesterday, FinCEN released a statement that said that they are going to, or they're planning on declaring developers and ICOs. I'll just read it off. A developer that sells convertible virtual currency, including in the form of ICO coins or tokens, in exchange for another type of value that substitutes for currencies, a money transmitter must comply. That means that if you do an ICO, or if you're a developer that's just made your own coin or whatever, and you put it on the market or you traded it for something else, you are considered a money transmitter. A money transmitter is essentially reserved for things like banks or for like a Western Union type of situation, or somebody that is moving money, and you have very clear regulatory compliance that is required when you do that. So if you don't know this, and this is something you need to talk to your accountant about, this is definitely not, this is not like the be all end all. But if you are doing your taxes in April or before April, whenever you do them in the United States, you need to declare if you used any exchanges that are not in the United States. Okay, so if you traded something on Binance or on KuCoin or anything that's not in the US, which is basically Gemini, Kraken, Coinbase, Bittrex. Those are the big US ones. I believe I'm not missing anything. You need to report that. Now, you don't necessarily there's no like tax implications. You just need to say, hey, yes, I put money into these particular exchanges, and there's limits. It's like 10,000, 100,000. There's different limits you have to. So you do this so that you're basically saying, hey, look, there's money in these exchanges, or I've used these exchanges. I'm declaring that so that FINRA and FinCEN FINRA is like the enforcement agency. FinCEN is kind of the regulatory body, can keep a record of that as they look at anti-money laundering and know your customer, which is a big deal, right? That gets into national security issues. The reason why this is a big deal for you guys is that this represents a very, very expensive and important problem that can be solved on the blockchain. Okay? So these guys are coming out and saying, you need to follow these particular laws. There's going to be some fallout about this, and there's a lot of hoopla, but as an investor or trader, you need to say, all right, well, how do I solve anti-money? How do I solve KYC stuff? How do I make sure that ICOs and developers are being compliant and working with the government in that sense? So for the SEC, right, you get into security tokens. That's a very expensive problem to solve. KYC and anti-money laundering laws, that's more of like an identity thing. So you look at things like, I'm biased because I own Civic. That's one example, but then you get things like Self-Key, I believe it's an identity platform, and I think Stratus is coming out with that identity platform. Things like that. That's how you should start to look at this sort of macro trend as it relates to ways you can make money. So you start to read the news. Most people will just stop and be like, oh man, it's the government. They're coming in to take, blah, blah, blah. But as a trader, as an investor, you need to start saying, okay, what's the problem here? what's a potential solution and what are companies that could profitably solve this solution, because it's going to be a very profitable problem to have. So that's how you should start to look at things like that. That's how I look at things like that. Okay, among other things. Here's another piece to keep in mind as it relates, I think, to Waltonchain, what just happened with Waltonchain. There is a piece of news that came out. It says members of China's main political advisory proposes national crypto trading platform. Okay, so they came out and they said, China's been doing a lot of regulation. Obviously, China has its own framework for pretty much everything, with firewalls and isolationism and everything like that. And they want to create some sort of China, like mega China exchange, like the exchange for China, which in many ways I think would tee up the idea of, China coin or yuan coin or whatever you want to call it, if they decide to do a sovereign crypto. And so they're going to do this. And you look through the site and you're like, okay, that's interesting. And then maybe I'm missing something, but on VeChain, on Reddit, they cited this idea, right? This idea of China proposes this national currency trading platform, and VeChain has that, kind of built in. And there's ideas that VeChain's been working with the Chinese government, and because of this, VeChain has the price has gone up, I think 10 or 15% this morning based on this news. Now, that's great, but I personally can't figure out exactly, was there a partnership? Did they say VeChain's being used? Is it a rumor? What is it? Because I go and I read other articles. They're coming out this same day, came out today, where it talks about how the Chinese SEC is saying that China needs more centralization. So maybe it's going to use VeChain, maybe it's going to use something else. But if China is saying we need to be more centralized and we need to make a huge national exchange, I don't see how they're going to make a decentralized platform, or how that's going to really solve it. Now, I could be missing something. I could be totally not seeing something that many people will, and I'm sure I'll be proved wrong in the comments by people who own VeChain and are going to lash out. That's fine. But this is the kind of thing where the analysis just needs to keep going. If you see this, or if you see a Reddit thing and then you see the price going up, you can't just make a decision based on that. You need to prove yourself wrong. So you go to why, they're going to centralize it. What is the most likely scenario given what China's top priorities are, which is keep money in China? That's like their number one thing. So it's just something to think about. I think this is just how you can look at these kind of news articles as it relates to price, because when it really boils down to is we come back and you look at CoinMarketCap, you look at how all these prices were just, people are looking for reasons to buy stuff. They're looking for prices to change a big amount because of that psychology, right? One of the best things anyone ever told me, this really famous marketer, and he was like, you know what, Carter? People want to buy stuff every single day. They're going to buy stuff every single day. And no matter who puts something in front of them, they are going to spend that money. Some days it's going to be on stuff that they need or want, and some days it's going to be because they need to spend money. And the more boredom is built into the current situation, the more that urge is going to need to be filled, and subsequently will be created by the very people that are, like the participants. In other words, people will make mountains out of molehills in order to feed that desire to buy, to get that excitement. It's really about like being addicted to something. And this is a good situation where, unless I am totally missing something, this seems like it's pumping a price on how big is VeChain? VeChain's 215, how was that? 200, VeChain, give or take, $2.3 billion market cap, goes up 11% against Bitcoin, 5% on USD off of a rumor. That's crazy. That's like $200 million. almost, maybe, I guess what, $150 million dollars. That's crazy. People are feeding this sort of thing. Is it real? Is it not real? Are you trading it? Are you investing in it? What's the decision? So anyway, you could see I'm just this is all a game of marketing and game theory and greater fool stuff. Until we see a clear bull trend, until these companies start to produce stuff, this is the way you have to analyze this. Otherwise, you're going to get smoked. You're going to get burned, which brings me into the final piece. I posted this yesterday. I mentioned I was reading the book Market Wizards. I try to read like an hour a day in the afternoons just to kind of learn about traders. And what's interesting, if you haven't, it's on my Twitter. I'll link to it. And this guy, Mark Weinstein, was interviewed, and he's this like legendary track record of being a very, very accurate trader. And what he does is he just waits for confirmations and he sells before the top. So he really trades the middle of a trend and doesn't really try to get to the extremes, which is a much higher percentage way to do it. And this, what he talks about is not only, he says, any final advice you have for a beginner trader? And he says, the second paragraph, limit your losses quickly. To paraphrase from reminiscence of a stock operator, most traders hold on to those losses too long because they hope the losses will not get larger and take profits too soon because they fear that the profit will diminish. Instead, traders should fear a larger loss and hope for a larger profit. Now, there's a few things that I think are really important here. One is like literally what he said, where you should fear losing money. So if you buy something and it immediately starts to drop, you should fear that, and you should get out of that trade as soon as possible. All right, so that's like the first piece. The second piece, which I think is more important and more helpful for any of you, is the perception of what this means. I think a lot of people are like, look, I'm just in crypto. I just bought Bitcoin. Been in for a couple of months, or even just got a couple of weeks, maybe 6 months, I don't know. And I'm not interested in trading. I want to hold on to this. Why do I care about this sort of information? Why do I I don't want to be a trader. Or, what's something that's more intro level? And I think that's a really good question, because many people confuse crypto with the regular financial markets, because it's on, there's like almost like a stock exchange. There's a place you can look at charts, and there's rankings, and it kind of looks the way that securities would look when you look at Google Finance or wherever you're, E-Trade or whatever. But it's not. There's no index funds in cryptocurrency. There's no beta returns, meaning like there's no kind of baseline, like when you blend everything, here's what the returns look like in crypto. It's too young. Cryptocurrency is a game of game theory, of marketing, of technology. It's everything in one. And so when someone asks me, like, what's the intro level stuff? What's the beginner theory? My answer is there is no beginner theory. There's stuff like dollar cost averaging, which obviously if you join the newsletter, there's a clear breakdown on how to do that. The second piece is, just buy the top coins because they have the best chance of surviving, most likely. But beyond that, nobody has any idea what the long-term winners are going to be. And here's an example. Let's say it's 1994. Netscape came out a year before. The internet's starting to get some, people are starting to use it. I think maybe like 1 million, 2 million people are using Netscape at this point. Like email starting to, whatever. We look back at 1994, and if we just think about it conceptually, we're like, oh man, if I was that early in the internet, I would have crushed it. Like these companies became trillions and trillions, major money. But if it was 1994 right now, would you know exactly what to buy? Would you know which stocks to hold, which companies were going to explode? And don't even think about like the bubble crashing or anything like that. I think that's a poor analogy. Think about it more, which of those internet stocks were going to go big? And the answer is nobody knows. And in fact, back then, you couldn't even do like a basket of internet stuff because it was so volatile and things were going so crazy. Now it's a little different with stocks versus crypto, but that is why it's important to, one, recognize that this is different than any other kind of investing. This is much more about speculation than anything else. And two, thinking like a trader is really important, even if you consider yourself a passive investor, because at some point you are going to need to make a decision about trading out the coins that you believe in. Because I don't care what your portfolio looks like. It doesn't matter what my portfolio looks like. It's all going to change in 2 to 3 years. And if you're not slowly starting to think about how do I evolve, like every month I need to re-examine what I'm looking at, you're not going to evolve with the market, because there is no, like the market's still being built. We don't know what it's going to be. And I think that's the price of entry if you want to play the long game. And I say this as somebody, I got in being like, I'm just going to buy Bitcoin and Ethereum and I'll see you later. And that's kind of like what my plan was in 2015, 2016. But it's changed because something else could be the big one. Like there's different opportunities. And I would encourage everybody to just start thinking about that. I'm not saying you got to start day trading or weekly trading or trading at all, but you need to think like a trader. It's really, really important so that you can have exposure to what will be the eventual Amazons and Apples and Googles and all that sort of thing. Okay. Second thing, I think maybe the smaller point is that it's really easy to confuse. This is true for everything. I mean, this is kind of true for crypto, but this is true for really anything. It's easy to confuse beginner advice with sound fundamental principles, because principles and fundamentals are usually very simple and they're usually very boring. A good example of that is buy low, sell high. If that's the thing that I told everybody, it would widely be considered beginner advice. People would say, like, oh, you want to learn beginner stuff about trading or investing? Go to CoinMaster, go check it out, which is fine. Like, that's great because I'm talking about simple concepts. But in fact, that's the thing that very few people can do or will do. That's like what the professionals spend their lives trying to do because it's so simple, right? And this is a good example. This limit your losses quickly. It's a very simple idea. It's a very basic idea in many ways, but it's incredibly hard to do. It's what the pros spend their lives doing. And whenever you get to the top level of anything, any discipline, trading, investing being no different, any competition or skill set, across the board, they will always say, get the fundamentals dialed and then work on all the tricky, the tactics, the tricks, the hacks, all that sort of stuff. That sort of stuff works itself out. But the real long-term big success comes from mastering these simple fundamentals. I mean, that's why I call it coin mastery, so that I can master this sort of stuff. And I hope that many people out there can too. So I think that's just an important distinction. I think that keeping that mindset open and not getting pulled into what you want this to be, but really just looking at crypto for what it is and not like what you hope it to be. That sort of consciousness is very important in your long-term decision-making and success. It's true with everything, but crypto's kind of in my opinion, I think and money is a very good indicator of how, this expression, they say how you do one thing is how you do everything. I think how people handle money is typically a very good indicator on how they really approach all decisions in life, which inevitably leads to actions, which reinforces beliefs, which leads to more decisions and leads to actions. It's like a cycle. Anyway, great seeing you guys, and I will catch you tomorrow. Peace out.